We have been told to be on alert for the S&P 500 to do this. In this video, we'll check on the status of the S&P 500 on how well it is doing what the market has alerted us. We'll look at the market sentiment, market internals, the price action of the S&P 500 and see what is the market telling us now about where the S&P 500 is headed. Welcome to another S&P 500 analysis. Today is March 12, 2023. In my March 7 video, I pass on the market message that the S&P 500 is heading lower, and so is the NASDAQ 100. Now here's a clip of that video. And here's the thing to watch. You can see this cumulative AD line is actually making a bit of a lower low here, but the S&P 500 is still closing at a higher low. So that's a negative divergence, so that's why I'm expecting we see a lower value on the lower level from the S&P 500 in the coming days to resolve this negative divergence. Before we go and see what the cumulative events decline and the other market internals are telling us, let's first review what the S&P 500 did last week. First thing we notice is the range that last week has expanded to 232 points. Now it lost 184 points or 4.55% and finished the week with a weekly engulfing candle. It actually engulfed two prior weeks price action, and it is still one time framing down. What that means is it is putting in lower low and also broke down from this short-term trend line and closed below this 10-week and also the 40-week moving average. And here looking at this table here of all the indexes and just kind of take a quick look at how they perform for the week, we noticed that the Russell 2000 was the worst performer, lost a little bit over 8%, and the Dow Jones Transportation followed with almost a 6% loss, and the New York Stock Exchange Composite 5.25%, the NASDAQ Composite 4.7%, the S&P 500 4.5%, and the Dow Jones Industrial also close to 4.5%, and the NASDAQ 100 3.75%. Now looking at the year to date, the NASDAQ 100 is still leading the pack with the most gain. It's still holding a gain of a little bit over 8%, then followed by the NASDAQ Composite, and also the Dow Jones Transportation is still holding a 6% gain. But we also noticed that the New York Stock Exchange Composite and the Dow Jones Industrial is actually lost. It's in the negative territory already, and I wouldn't be surprised to see that the Russell 2000 will also go negative next week, and along with the S&P 500 if the pullback that we saw last week continue to pull these index down. Now let's take a look at this sentiment chart here. As you can see, the VIX is up at the 24.8. Now it is up above this 20-30 zone and also come back up on the 20 level. So between this 20 and 30 zone, the market participants are pretty fearful but not panicking yet. Right now we are seeing that the market participants are being fearful, and if we see this VIX come up, pop above 40 level, then that could be a level of capitulation, and that could tell us to look for possible buying opportunities soon. So we'll keep an eye on that 40 plus level of the VIX and see will we see this that level in the coming week or in the coming month. And also looking at the put call ratio here, we see the put call ratio is above 1 and is sitting at 1.38. Now, what this means is whenever the put call ratio is above 1, that means the market participant is buying more puts than call, and they are pretty much risk off and very bearish. And if they are between this level here, inside of this zone here, between 0.75 and 1, that tells us that the market participant are being risk off and starting hedging their long position. And if it's down at the 0.5, 0.6 level, then the market participant is risk on and getting bullish. So right now, the market participants are quite bearish because they are sitting here with a put call ratio of 1.3. So they are definitely buying a lot of put and betting on the downside. And looking at the internals on this one here, the up-down volume ratio, we see that New York Stock Exchange up-down volume ratio on Friday was 7.6, almost 7.7 to 1 on the downside because it's negative. So when this ratio is negative, that means there are more down volume than up volume. And as you can see, for most part of the week, it's pretty, it's basically in the negative territory. So there are a lot of sell pressure. And when we see this getting up to 4 or 5 level, then, when it get down to -4 or -5 and higher than more negative, then that implies there are a lot of sell pressure. And likewise, if it's positive, then you get the buying pressure. So obviously, we are looking at quite heavy sell pressure on Friday and also on Thursday of last week. And looking at this daily advanced decline, on Friday, there were 2,193 more declining stock than advancing stock. Now, when this number is negative, because this is a net difference between the number of stock advancing price and the number of stock declining price. So when this number is negative, that means there are more declining stock than advancing stock, and vice versa. If it's positive, then that means it has more advancing stock, more stock advancing price than stock decline in price. So on Friday and also Thursday, we see this is quite negative, and on Friday there's 2193. Now let's put this in a little bit more perspective. In a typical trading session in the New York Stock Exchange, there usually a little bit over 3,000 stock actively traded during the trading session. So let's round this off, assuming that there's only 3,000 stock traded in the New York Stock Exchange. And let's round this off to 2,200, on Friday minus 2,200. So we know 2,200 definitely is a decline in price, 2,200 stock. So if we take 3,000 and subtract 2,200, that leaves 800 stock that will be divided equally between the decline and advance, assuming there's no stock that is unchanged. Even though there might be, compared to 2,200, is a relatively small number. So if we split that half and half, that means 400 stock is up and 400 stock is declining. So we take this 400 and add to this 2,200, that's 2,600 stock out of 3,000 stock on Friday was down. And that is about 86-87% of the stock that is traded, that were traded in the New York Stock Exchange on Friday, were down. So that kind of gives you a perspective of how broad that market, on the downside. There are a lot of stock, 87% of the stock that were traded was on the downside. So you got broad market participation on the downside. Now, there are days that we see that the market is down, but, only a few stock, like, those large cap tech stock is down, and we don't see too much of a negative advanced decline number. So that kind of tells us that, hey, even though the market is down, but we are not seeing a broad market participation on the downside, and that would be positive. But on Friday, we see that broad market participation. It tells us there are a lot of selling going on. So that kind of, raised that little caution flag to say, hey, be careful. This is not a little bit of a pullback. It is a sell-off. Okay. So that's the perspective of this number, why it's important to look at the magnitude of that number. And here on this chart, we are looking at the number of stock making a new 52-week low versus the number of stock of making new 52-week high, and what is the net difference between the number of stock making 52-week low and number of stock making 52-week high. And as you can see, minus 184, that indicates there were more stock making 52-week low than 52-week high. So there were 184 more stock making new 52-week low than 52-week high. See, here is the raw number is 39 stock made 52-week high on Friday, and 223 stock make new 52-week low. So we see that this number is expanding. So that means there are more stock making new 52-week low now. So and also the other thing is when the market's starting to pull back and sell off, we see this expansion of the new low, new 52-week low. That means there are a lot of stock is sitting near the 52-week low. So as soon as the price drop below that threshold, then we see a lot of stock, making new 52-week low, and that is not a healthy market because that tells us that a lot of stock is still pretty weak and sitting near the low. Now here's the cumulative AD line, the advanced decline. This is nothing more than the net difference of the daily advance that we add to a previous cumulative sum. So if it were if the advanced decline number, the daily advanced decline is negative, then we basically subtract that from the previous sum. But if there were more advancing issue than declining issue, then we get a positive number, then we add to this previous sum. So we plot this, cumulative sum, this line here, and we call it cumulative advanced decline, or the AD line for, short. So we basically are just calling this AD line, just kind of, safe from keep on saying cumulative. So we see last week, what we saw last week was we saw this thing, coming down, the AD line, but we saw also the S&P 500 was actually closing above this low here when you see this AD line is getting below this low. Okay, so that's basically creating that negative divergence, and that tells us that we should expect the resolution of this negative divergence is for the S&P 500 to come out and dip below, come down and dip below this low, and along with the advanced decline, continue to move down to get that low going, and that's basically what we were watching for. Last week for that to play out. So as you can see that it did play out the way that the market was alerting us to keep an eye on a lower S&P 500 value. And now let's take a look at the NASDAQ market internals. You see that the up-down volume ratio on Friday was also 4.9 to 1 or close to 5 to 1. On the downside, we saw that on Thursday also. Only on Wednesday, we got a little positive up-down volume ratio, but overall, throughout the week, there was, selling pressure for mostly of last week. And also the advanced decline. You see the advanced decline on the, in the NASDAQ market on Friday was 2880, so 2,880 more declining issue than advancing issue. Now, there are a little bit more than 3,000 stock traded in each trading session in the NASDAQ market. But again, this is also represent near that 80% plus type of a broad market sell-off. And you see that same on Thursday. And pretty bad on Monday and Tuesday also. Just on Wednesday, we got a little bit of a neutral day. Not too much of a difference between the advance and decline. That's why you see a little blip down here, although it is negative, but it's pretty close to zero there. And here's the disturbing part for the NASDAQ market is the new high and new low. You see that the new 52-week low, 583 stock make new 52-week low versus only 65 make new 52-week high. So you could see the difference between that and also the expansion of the number of stock making new low versus the new high. So this is not good. It kind of tells us that there are a lot of weakness inside the NASDAQ market. And here again, also for the cumulative AD line, last week we also saw that the advanced decline was coming down, and the NASDAQ 100 was still holding up. So that's why we also was looking at the NASDAQ 100 to come down as well. Now here's the table of the performance from last week for the 11th sector in the S&P 500. As you can see that the financial was the worst performer last week. It lost 8.5%, and also the other thing is consumer stable is actually the best performer. It only lost a little bit under 2%. So we see that the the material is 7.5%. The real estate, 6.8%, and so forth. You could go and look to this table by pausing the video. So let's go and take a look at each one of these sector relative strength to, the relative performance to the S&P 500. So here is the XLK, the technology. You can see that it is holding about this 134.92 sort of support level here last week. So I'm kind of looking to see if it breaks this 134.92, then the next potential support will be somewhere around this 129.54. You also notice that relative performance been outperforming the S&P 500 until recently. And on Friday, we see a little bit of a pullback here on the relative performance, showing a little bit underperform relative to the S&P 500. That's why the NASDAQ 100, it is still leading the year to date in terms of percentage gain. It is mainly due to the technology sector. And here on the XLV, the healthcare sector, we see that it's pretty much underperformed the S&P 500. I'm looking to see would it be able to find some support down here near this 120, 129 area. And the consumer discretionary is also underperformed the relative to the S&P 500. I'm looking at somewhere around this 134.99 and 135 area to see would it be able to find support here. And then the XLF, the financial, we all heard about the Silicon Valley Bank, belly up or being taken over by the FDIC. So you see that it is underperformed, and that was before, even show underperformance before the Silicon Valley Bank crisis. Okay, and also we are looking at a potential support here sitting right now at 32.37. If it breaks this level, we might be watching for potential support here at 30.14. And here's the communication sector. We also notice it's kind of pretty much flat, essentially performing along with the S&P 500. And we're looking at this possibility of coming down to 50.80 with the next potential support. And here's the industrial. The industrial was a little bit, outperformed the S&P 500 until recently kind of flat. But look at the beginning of the year, it was really underperformed, relative to the S&P 500. Right now, basically looking for a potential support level down here at 96.80. And here in the consumer stable was also pretty weak, underperformed the S&P 500. Till recently, it's kind of flat. Right now, we're looking at 69.62 for potential support. And the energy sector has also been basically underperformed throughout the beginning of the year here. As a matter of fact, it was back in October. We see a little bit underperformance, came back up a little bit during the last month of the year. Then at the beginning of the year, we also noticed underperformance here. Right now, it's kind of sitting flat, so it's basically performing relative to the S&P 500 or along with the S&P 500. And we're looking at the next level of potential support somewhere around 78.55 if it breaks below this 82.65. And here the real estate sector, we see that is really underperformed relative to the S&P 500. And right now sitting at 36.85. If it breaks that, I'd be looking at this low here somewhere down at the 33.32 area. And finally, the utility sector has also been quite weak and underperformed the S&P 500 until recently kind of pretty much flat here. Looking at 61.96 here, possible support level. And looking at the US dollar, last week we were talking about the US dollar, looking for it to come back up to this 105 area, and we saw it came up to this 105 and pop above this 105.63 area. Now we got this pullback, from Thursday and Friday, and looked like the market thinking that the Fed might pivot because of the Silicon Valley Bank crisis here, but I doubt it. I think it is going to be bouncing back up. So maybe it would come down and test this 103.82, but I'm looking at this thing to come back up and get back above the 106 and come up to these level here, 107 and 108. I don't think the Fed will pivot. And here's the 10-year yield. The market really think it's going to pivot. Yeah, notice that it came up to this 4% here a week ago at 4.091. And we're sitting down at this 3.9. And we're saying that still looking for the rate to come up and possibly get up to this 4.2 level here. And then we saw this Silicon Valley bank collapse. And we see that the rate came down to 3.696 from a 4.091 a week and a half ago. So that's quite a dramatic pullback here. But again, I think this thing will rebound back up. I don't think the Fed is have finished hiking rate yet. If they really serious about fighting inflation or kill that Fed put. And here's the yield inversion, the 10 and the 2. We see that it came down to 1.081. Then on Thursday and Friday, it popped back up. It's still inverted quite deeply, even though it is not more than 1. But it's still sitting at 0.89 as of Friday. So we're still sitting a more of a recession type of a level here. And looking at oil, crude oil was kind of putting in this higher low here. Seems like it might be forging a little bit of a ascending triangle. So maybe it will work itself back up to this 82.76 and break this resistance and push itself back up to this 89, this 90 area. But if it breaks this trend line here, it might get a little bit of a flush and come down to this 69.57 and flush out some of the week long and see if we'll get a bounce back up and come back up to this 82.76. And here's silver. Remember last week I was talking about silver that I do not believe that silver have found low down here yet. Even though it popped back up above this 21, I'm saying that I'm still looking for another retest of this 20 area here down at this low. You can see it actually came down lower than I expected, but it is within this zone here, right? So right now we might get a pop back up. If it could stay above this 2050, then I'd be looking for the move to come back up to this 21. And if it does, we're going to see this 2184 and maybe possibly this 22 area and maybe work itself back up. Now, gold is getting interesting. You're putting a little bit of a double bottom here on this 1823 area here. And now it broke out of this pivot, this double bottom of this W pivot here. And it is getting above this 1856. So I wouldn't be surprised to see that it might, come up to this 1920 here. So I'd be keeping an eye on gold here. That might be a play here if the market get more jitter about these potential financial or regional bank collapsing or having a more than just Silicon Valley Bank experience this bank run. So that might push some people to start looking at gold for a safe haven. Now let's take a look at the index price action, starting off with the S&P 500. And before we go and review what it did for the week, let's go back and take a look at the downside scenario that we were keeping an eye out for this week. And let me play this clip from the previous week S&P 500 analysis video. But if it is unable to hold this trend line and start break below it, then we be keep an eye on the lower range of the expected move between 39.71 and 39.50 and possibly come back down to this 3900 area. So as you can see, it wasn't able to hold this trend line. It came down, took out this lower range of the expected move and came down to this zone. And actually it came down much lower than what I expected this early on, because once it breaks this zone, we do have a possibility of coming down to possibly check in this area here. So for the coming week, this is the expected range that we're going to be looking at. And so right now, the upper range is somewhere between 39.95 and 39.71. And the lower range is 37.52 and 37.30. So for the coming week, we will see what it come up and possibly back check this 3906 area and see what it be able to get back up. And if it does, then look for this upper zone to be in play. But if the market continue to slide and dip down, then look for this zone to get taken out and dip below this 38.18 and come down to this lower range of the expected move. And once it breaks this lower range of the expected move, then we are basically looking at this area here for the next potential support, and that would be somewhere down at the 3700 level. And looking at the NASDAQ 100, as you can see, the NASDAQ 100 also came down to this zone here and tagged the lower range of the expected move, and wasn't unable to come back above this trend line here to move into this zone above 12,420. So for the coming week, we are looking at these ranges here, and we're basically looking at the upper range of 12,260 and 12,200, and the lower range is between 11,460 and 11,300. So for the coming week, the scenario that we'll keep an eye on is would it be able to get a bounce back up to this zone and try to tag this upper range, and also test this trend line here. And if it's continue to dip and unable to get back up above that, then look for this 11,600 zone to put in play and come down to this lower range of the expected move. Then if it doesn't hold this range here, then we'd be looking at the possibility coming down at this zone here, down near this 11,000 level. And then for the Russell 2000, last week we're saying that if it dips below this this level here, below this 1880 area, then we could very well see it come down, work toward this 1786 area, dip below this 1800 level. And as you can see, it came down to this level here. So for the coming week, we'll basically see we'll get a bounce back up, and basically we're still looking for the Russell 2000 to come back down to these low here and get below this 1700 and then the 1640 area here. Although we might get a little bit of a bounce, chop around up at this zone and testing this 1800 level and then push back down. I'd be surprised it will work itself back up to this 1900 area in the near term. Because there's also we could also draw a little bit of a trend line down here coming down. So at best, maybe at this 1850 area. And for the Dow Jones Transportation, last week we're looking for the possibility to see would it be able to get back above and stay above this area here at this 15,000 level. But also on the downside scenario, we're saying if it unable to stay above that 15,000, then we look for it to work itself back down toward this 14,200 area. So right now on the coming week, we're going to keep an eye on to see would it be able to hold this trend line and maybe possibly make a move back up. But if it is unable to hold this trend line and break below this zone, then we are watching for the Dow Jones Transportation to come down to this near 14,450, 13,500, 13,450 area, this zone here. And for the Dow Jones Industrial, we see that we're looking for the possibility of maybe holding up above this 33,200 area and then pushes back up to this 42,000 area. Now on Monday, got in a this little bit of a shooting star type of candle. So that kind of gives us a clue that it might not be able to move up here, or at least the expectation for the near term to move up there might be low. Then on Tuesday, we got this tremendous downside bearish candle and formed this evening star here. And that kind of gives us a little bit of a reversal pattern here. And also a dip below this 33,200 area. So that kind of spelled trouble for us. And we're saying that, once we see it break this level here, we're looking for a move down to this 31,800 area. So for the coming week, we probably will see a lower chop here and then work itself down to this 30,400 on the downside. But if it's on the upside, if we could get a little bounce, then maybe it will come back and back test this area here near 32,500. And the best is probably, come up and maybe test this zone once again for potential resistance here at 33,200. And finally, for the New York Stock Exchange Composite, we're basically looking for the upside scenario to come up here to this near the 15,900. But then on the downside, break this zone, step below this 15,600. We're saying that it's going to come down and test this level here at 15,240. And if it doesn't hold this level, then we're looking for this 15,000 level to get tested. So you see that it dipped down to this zone here last week. So now for the coming week, we're essentially looking to see would it be able to get a bounce back and back test this 15,240, or would it continue to slide and dip down here to this 14,300, 14,400 area, checking these, testing these pivot high and pivot low here for the New York Stock Exchange. I will post a separate video on the SPY, QQQ, IWM, and the E-mini S&P 500 future, along with Apple and Tesla later on. So stay tuned and subscribe, and be sure to smash the thumbs up and post a comment to help promote this video. So in summary, the sentiment are telling us the market participants are getting fearful and bearish. And the internals are telling us there are strong downside pressure in the market. So just a reminder, cash is a position. Thank you for watching and stay safe.